I'm just going to come out and say it, SCHD or the Schwab US Dividend Equity ETF is a must-have for more or less every single dividend growth investor's portfolio. Now I know that's sort of a bold statement, but in this video I'm going to explain exactly why I personally think this ETF, SCHD, could potentially and in my opinion be the perfect foundational dividend growth ETF for every single dividend growth investor's portfolio, especially for long-term investors out there. Now whether you're interested in this ETF, maybe already hold on to it, make sure to stick around, drop a like down below, and let's get right into it. Real quick for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So I said that this ETF is perfect for every single dividend growth investor's portfolio, so let me break it down. First of all, the index that SCHD tracks, the Dow Jones US Dividend 100 Index, has a rigorous set of screenings that makes it very hard for different dividend stocks to even be added to it. Now this basically creates a backstop and takes a lot of the guesswork out of single stock picking because more or less a stock is not going to be held in this underlying index unless it deserves to be. Now, before we go over this breakdown and explain what SCHD's methodology is and explain exactly how this ETF works, again, I repeat, this is very, very important if you do plan on holding on to SCHD and even possibly making it a large portion of your overall portfolio. It's really important to understand what you own and, of course, how the asset works. So first off, it says, what does SCHD screen for? It then says, I'm going to regularly cite information from the Dow Jones Dividend 100 Index Pages Methodology PDF, which of course you can find on spglobal.com. Now the reason being is, as you can see right here, the SCHD ETF tracks before fees and expenses the total return of the Dow Jones US Dividend 100 Index. So when digging into SCHD, it's important to dig a little bit deeper into that index. It says the index universe is defined as constituents of the Dow Jones US Broad Market Index excluding REITs. So within SCHD ETF, you are never going to see REITs, real estate investment trusts. So if that's something that you want large exposure to, you're definitely not going to find it here. Now for stocks to enter or exit the index that SCHD tracks, these are going to be the following screens. It says minimum of 10 consecutive years of dividend payments, which is very important, especially for any dividend investor out there. When you are qualifying, if you want to buy a dividend stock or ETF, you of course should not only look at things like dividend yield, dividend payments for consecutive years, or even price performance. In my opinion, you should use all those things to paint a picture of if or if not, it's going to be a potential good investment. But within the index that SCHD tracks, that is one of the main screenings. The stock needs to have at least 10 years of dividend payments, which that means historically speaking, there shouldn't be any dividend cuts unless something crazy happens because 10 years is quite a run. Next, minimum float adjusted market capitalization of US 500 million. So also very important to make it into the bunch, the stock needs to have a minimum of 500 million market capitalization. Next is a minimum 3-month ADVT of US 2 million. Now also SCHD is low cost and potentially tax efficient with an expense ratio of just 0.06%. This dividend growth ETF is not going to cost you much at all, even as you hold hundreds of shares of it in the future. Now maybe I am a tad bit biased considering I currently hold around 608 shares of SCHD in my long-term dividend growth portfolio, and I intend to get this position to nearly 1,000 shares by the end of this year or early next year if I keep buying it like crazy. And as you can see throughout my portfolio, I don't own only SCHD. I like tons of different investment vehicles out there. But as far as a dividend growth investor's portfolio, I see no reason on why it shouldn't have at least some shares of this ETF inside of it. But don't worry, I'm going to make this very, very clear and simple. We talked about the fact that SCHD's underlying index has a high quality methodology, making it very hard for stocks to even be within the underlying index. So as a long-term busy investor, you don't have to worry necessarily about what this ETF is even holding on a daily basis. But also along with that, as a long-term dividend growth investor, what are some things you're looking for? You're going to be looking for a cost-effective way to get exposure to high-quality assets, which we covered. The expense ratio is just 0.06%. On top of that, you're also going to want an investment vehicle that's not only going to pay you, but also grow your net worth long-term. And SCHD has definitely done that. The ETF is up over 207%, and this is since 2011. But on top of growing your net worth, you're also, as a long-term dividend growth investor, going to want to have exposure to dividends and dividend growth, which in my opinion, SCHD does the best of both. You see, across the market, there's of course other different high-quality dividend growth style ETFs out there that offer a starting yield of, let's say, 1.5%, maybe 2%, or maybe even upwards of 2.75%. but SCHD offers a 3.4% trailing 12-month dividend yield, and this is right now with this ETF trading nearly all-time highs. But along with the dividend yield at almost 3.5% starting, an investor is also going to get potential exposure to massive dividend increases long term. Like for example, in 2024, the last dividend that was paid to us in December was 74 cents per share. And if you go back just 10 years ago, the same exact month in December was 28 cents per share. So this means that investors that held onto this ETF for the last 10 years not only are sitting on massive gains, but also got paid dividends every single quarter, and on top of that are getting paid around 3 times as much per share that they own. Now, with an ETF that's grown in price substantially over time, but also paying an investor dividends over time and paying them more and more every single quarter, year over year, more or less, this is going to create a massive compounding effect, and especially if dividends are being reinvested into SCHD over time, if you have a decent timeline ahead of you, there's absolutely no way that a high-quality dividend growth style ETF like this one is not going to snowball your portfolio and your dividend income out of control. To the point to where, as of right now, I currently hold a position in SCHD that's worth, let's say, more or less $48,000, with my yield on cost being around 3.7, 3.8%. The expected annual amount increase about 9%, the expected share price appreciation around 5%. If I were to only purchase, let's say, $100 more of SCHD and just hold onto my position, keep in mind, my entire portfolio is not SCHD. I just have a portion of it in there. But if I were to do that over time and just let the dividends reinvest into more shares of SCHD, and on top of that, spend $100 every single month, in 30 years, I'd be 61 years old, and just that position that I have as of right now would be worth around $1.257 million, earning me potentially $130,000 per year in dividends just for those shares of SCHD that I already own. Now, if you're a dividend growth investor, you already know that the crazy thing is that you don't even need to build out a massive position into something like SCHD or other high quality dividend growth ETFs off top, because over time, as long as they pay more and more in dividends and compound, a relatively small portfolio is going to grow like wildfire. But the bigger point that I'm trying to make is not necessarily that every single portfolio needs to have SCHD in it, but every single portfolio that a dividend growth investor is building. If a dividend growth investor is solving for price appreciation, but along with that, dividends and more in dividends over time, they need to invest into high quality ETFs like this one and build it as a foundational position if they want to almost guarantee, at least historically guarantee, massive compounding gains over time. But now lastly, I want to hear from you guys down below. Do you currently own any of the Schwab US Dividend Equity ETF in your long-term portfolio? And if so, how many shares of it do you have as of right now? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.